Good afternoon. Good afternoon from London, and our students are from different parts of the world. Um, I believe from Pakistan, from Bangladesh. I can see Abdul Rahim is there, Mohit is there, Abdul Rahim from Pakistan, and Mohit is from Bangladesh. Mohit says, Good afternoon. Hi, guys, how are you doing? Students doing good? And I believe you can hear me, you can see me clearly. Is that correct? Can you please write me? Can you please confirm me? Right, I'm going to share my screen. I will go over the ACCA procedures and also my introduction. Thank you, Abdul Rahim. Thanks for your confirmation. Thank you, Ms. Mohit. Thanks for your confirmation. Without any delay, it's just 2 o'clock from London, and I think Bangladesh 7 o'clock and Pakistan 6. Am I correct? Uh, right. Can you also write me if I'm correct? I'm putting my camera down. And yeah, welcome everybody. Welcome to ACCA, Association of Chartered Certified Accountants. I really congratulate you for choosing ACCA. Let me appear on the camera a little bit more. Yeah, 6 in Pakistan and 7 in Bangladesh. Incredible, isn't it? And look at my screen over here. It's 2 o'clock in the United Kingdom, and we are doing ACCA is global certification, isn't it? It's a chartered accounting from the United Kingdom. It is taught and learned almost all over the world. 180 countries, members are there in many countries like Bangladesh, Pakistan, United Kingdom, Malaysia. Where not, they have offices, exam centers, and tuition centers. We are KBM. We are ACCA approved learning provider. We're also ACCA Gold trainee development partner. And I congratulate you people for choosing ACCA. There's been a time when I was like you many years back, and I started my journey and yeah, finished and now an FCCA. So let's go on to a little bit uh, uh, more, and we're going to use different books here, mostly Kaplan for this module. Yeah. You see, ACCA has, many of you started from FIA, and in the FIA, you have the knowledge level as well. Yeah. And then you have skills, and then you have professional. This paper is one of the FIA or knowledge level papers. In the United Kingdom, we do not have FIA, we have knowledge. FIA is available in India, Pakistan, Bangladesh. Those of you have done intermediate. Yeah, so you know that you have 7 papers. Out of these 7 papers, 3 are knowledge. Which 3? The one we're starting today, FA, Financial Accounting, MA, Management Accounting, and BT, often known as FFA, Foundation in Financial Accounting, FMA, Foundation in Management Accounting, FBT, right? So you can ask me, Sir Ilyas, 7 papers, you're showing 3. Other 4 are what? FA1, Financial Accounting 1 and FA2, yeah. Then MA1 and MA2. These are the 4 foundation modules. If you started from matric or intermediate, HSC in Bangladesh, it is called higher secondary certificate, or I don't know, probably in Pakistan, FSC, in short, intermediate, right? After inter, you start from this FA1, FA2, MA1, MA2. But if you're starting from A levels, you've done your A levels, you're going to start from this paper, FFA, FMA, FPT. So guys, today we're going to start FFA or FA. You see, FA, Financial Accounting. This is, to be honest, the first module of accounting. Thank you, guys. Thanks for the confirmation. The reminds it's a pleasure to be in the class with you. Thank you. You're welcome. I hope you'll have a good time. Now, I will go through many basics today with the ACCA, then we'll start this module, FA, Financial Accounting. As I said, this is the very beginning, first accounting module. Even if you did not do FA1, FA2, MA1, MA2, no matter. If you have done FA1, FA2, you will be a little ahead in the session. So after these 3 modules, in the skills, you have 6 more. You start with law, LW. There is a performance management, there's a tax, and there's a financial reporting, there's audit and assurance, and FM, financial management. In the professional, you have SBL, SBR, strategic business leadership, reporting, and then you have 2 more to choose from the option. Could be ATX, mostly people do it, AAA, audit and assurance. Like from here, you can choose your favorite one. In my time, I had my AA and APM. This one. So, and AFM as well, Advanced Financial. Anyway, you see, guys, very soon you're going to do skills level paper because you're doing knowledge now. After that, you're going to do this. Out of this 1, 2, 3, 4, you'll choose 2. So 2 mandatory, 2 optional, that is that. But you might have seen some of my videos, one of the videos that next year, 2027, ACCA is going through big changes. The exams are getting reduced, yeah? So, but I'm not going to talk deep in detail on those. Today is FA, Financial Accounting, right? Right. It's a very fun subject to talk about, interesting and very easily doable. Students pass with 90% marks. Right. About financial accounting from the ACCA website. You see, we will be talking about the purpose of financial reporting. Quality. Even today, we're going to go through some quality of the financial information. Yeah. There's some fundamental quality, enhancing quality. Yeah. We'll talk about it. Recording transactions like, doing debit, credit, double entry, right? And those double entries going to come up here, and preparing trial balance. Not just that, from the trial balance, you need to prepare income statement, balance sheet. We call it statement of profit and loss, statement of financial position, right? You do not need any prior knowledge, everybody. Zero knowledge. We'll start from the scratch, 0. Yeah. But if you have some knowledge, fantastic. This module will help you to do FR later on, financial reporting. Right? To be a chartered accountant, you must have this knowledge. Yeah, so FR, FA, these are the very popular. And from FR, you develop knowledge for SBR in the professional. The computer-based exams are computer-based on demand. You already are familiar with Study Hub. There are resources. I will be sharing those resources in this class. But for financial reporting, Kaplan is a very good study text or materials. You're already aware of BPP is there, Kaplan is there. There are many more, to be honest. There is a First Intuition, LSBA, Pittman, and more, but these 2 are very popular. Along with that, Study Hub, ACCA Hub is there. So for this financial reporting or FA, financial accounting, I will be following the Kaplan. And the book is already uploaded on your EMS portal, the ORB portal, KBM. Exam kit is uploaded, and I will be giving you mock exams later on. It's a 3 months journey, everybody. Now onwards, June, July, August, and you'll have your exam on September. Although this is on demand exam, but we expect you to do exams somewhere here at the end of August or beginning of September. Make sense? Right? Right. Before I jump into the chapter or topics, I'd like to talk about a little more. In the United Kingdom, you have chartered accounting bodies. ICAEW is still at the leading position. Then this is ACCA. Then there is a CIMA. Then there is a chartered accounting body from Ireland and Scotland. ICAS, Institute of Chartered Accountants of Scotland. 5 is ICAI, Institute of Chartered Accountants of Ireland. Yeah, that's basically not Ireland. This is they do the CPA, and the United Kingdom SIFA is there. SIFA, SEMA, and one I'm missing at this moment. Ireland is another one. Scotland. So you see, one is Chartered Accountant England and Wales, Chartered Certified Accountant, SEMA, Management Accountancy, SIFA is there, Financial Accountant, and Scotland. One I'm missing at this moment, but ACCA is one of the chartered accounting bodies recognized 180 plus countries. And once you become like, I'm an FCCA, okay, I forgot to introduce myself. My name is Ilyas. I'm an FCCA. You see, I have done the one you're doing back many, many years back. I have done we used to call it CAT, not the CAT, but Certified Accounting Technician. We used to have 9 papers, guys. Yeah. But you have 7 papers. So the 7 papers you're doing, I have done it. I have done 2 more. Then I have done skills and professional. Once you've done 7 papers, you get exemption from knowledge. You're going to do knowledge anyway. So that is nothing called exemption. You've done it. So, yeah. Once you see, I'm an FCC, I can easily apply for ICAW membership. You just need to pay an extra money every year. Yeah, that is an international recognition. So being an ICAW member, you are the member of all chartered accounting bodies, because ICAW even very highly recognized in the United Kingdom, Pakistan, Bangladesh, almost everywhere. Now, and so this ACC is also very popular, especially in Ireland. I will talk about this later on. There is a special visa called a CSEP, Critical Skills Employment Permit, that is open for ACCA. Can you believe it? Especially ACCA. We'll talk about this later on in Ireland. Right. So coming back to me, I have done my MBA from United Kingdom, Anglia Ruskin University, and I got a teaching qualification as well. I'm the head of KBM for ACCA and AET, and also I'm CEO of London Educators. All right, so you are under safe hands, all right? All right, good. So our students are there. Guys, that is all about the introductory talkie. A little bit more about your exam style. You'll see there will be 2 sections in the exam. Before revision, I will talk more about it. Part A or section A, there will be 35 MCQ question, call it objective test question, 2E, so 70 marks are there. And part B, there will be 2 multitask question, each worth of 15 marks, so total covering 30 marks. So basically, it's a MCQ, right? The answer is going to be on computer, MCQ. Yeah, welcome, Drama. Brilliant. So, yeah, this book's being published from the Berkshire. It's not far from us. We KBM, we have 5 branches in the United Kingdom, 1 in West London, 1 in East London, Barking, and 1 in Croydon, and 1 at Birmingham, 1 in Manchester. 1, 2, 3, 4, 5. Yeah, these are the 5 branches we have. Very soon we're going to open a North London office, and aiming for the Leeds office as well. Right. So that's all from introduction about KBM, about myself, about ACCA and your paper. I can see we're having another student. So, all right, we have another student join, Ashraf. Ashraf, you're welcome. You can introduce us, and welcome on behalf of KBM and myself, Ilyas. This lesson is recorded, so you can watch it from our EMS portal, online campus. So it will be helpful. I was talking about KBM has 5 campuses in the United Kingdom: West London, East London, Croydon. Croydon is South London, basically, Birmingham and Manchester, and soon we're going to have offices in North London and Leeds. And you guys are not doing any of this campus. You're not from any of this campus. We have global campus as well. Sorry, I forgot to mention that, isn't it? Right? You are a global student. And I believe I'm going to see you soon at our main campus someday, right? Maybe after you qualify your skills or professional, you come to London either for study or job. Brilliant. So, people, I am ready to start the class for today. Are you ready to start? Can you write me something? Can I see the enthusiasm meter? Can I check the enthusiasm meter? Are you ready to start? I'm ready with my pen, paper, and calculator. Yes, sir, from Mohit. And Abdurrahman is typing. Yes, sir. Yes, well done. You see, the way you are writing, Ashraf sends a thumbs up. Welcome, Ashraf. Uh, the way you're writing, you're gonna do the similar in the real exam. You're gonna use your keyboard. So it is a practice from the day one. So our session already started at 2 p.m. UK time. That's our session one. We will carry on from 2 to 3. And then we'll have a break, approximately 20 minutes break, okay? And then session 2 from 3:20 till 4:30. Sweet and simple, everybody. Now you can check out these times with your local time. Some of you are from Bangladesh and Pakistan. Ashraf, can you please let us know where are you joining the lesson from? Yeah, let us know in the chatting option. Then we move ahead. Today, I will be going over only chapter 1, right? I'll give you some tasks to do. There are pro forma, income statement, balance sheet pro forma we'll do. Over the next weeks, every Wednesday and Thursday, we have lesson. From 2 till 4:30, till the end of the August. So June, July, August. Over the next weeks, like today, chapter 1, tomorrow, chapter 2. Next week, we'll be doing double entry and moving ahead. There are some adjustments. Many of you have done FA1, FA2. You know these bits already in advance. Well done. And we have quite a few core items in between, which we will be going over. Right? Welcome, Ashraf from Bangladesh. Even I'm from Bangladesh. I started my ACCA back in 2005 with the CAT and FIA. Finished 2006 the CAT. It took me 1.5 hour, a half year, 1.5 year. Then on to the ACCA. Since 2009, I'm in the London, and yeah, right. That is that. Without any delay, on to the chapter number 1. So ready with your pen paper, please. We are using world-class Kaplan books. There are BPP books available as well, Study Hub as well. On our EMS, these books are uploaded. But my highly recommendation to you, please buy the books from your nearest available places. Right. So this is the chapter overview. Can you write me before I go through some, can I go through some basics? Yeah, as I said, I expect zero knowledge. You do not have any knowledge. Yeah. Why, I write, you write, yeah? Why we need accounting? It's the first question anybody gonna ask, isn't it? If you're starting ACC or accounting GCSEs at A level, isn't it your first question? Why we need accounting? Number 1, I'll give you only 2 items. You can write your answers, any answers. You're welcome to write down using the keyboard or write the one I'm writing. To quantify items such as sales, purchases, expenses, thus profit. That's the biggest reason. We'd like to know profit and loss. And then, okay, I'll give you 3 basically. To assess profitability and liquidity, but Profitability and can you write more? People are writing, can I see? To understand the business performance. Yeah, that's part of it. That's not, why not? Accounting is the language of business. That's kind of a philosophy, but that's correct. Performance, but the performance is basically the profit, right? Ashraf is writing. Abdurrahman, you can write. Don't worry about getting it right or wrong or right. Yeah, express your thoughts. So what I was saying, just as the profitable liquidity of a business, right? Profitability spelling. Yeah. So Mohit said performance. Performance is basically profit. Yeah. Which is expressed using the income statement. Yeah, that's correct. And I'd like to give you one more, which is related to stakeholder to present information in a meaningful way to stakeholders. The two and okay, everybody? To present information in a meaningful, what information? Financial information in a meaningful way to the stakeholder. Ashraf said we need accounting track every penny that come in and goes out in a business. It helps us to make smart spending choice. Very good. Why not? In short, you meant to say we need accounting to keep the record of what comes in and goes out. Basically, these are called transactions, which we'll be saying, looking at the next chapters, and helps us to make a smart choice or smart spending choice, not just spending income out both. So it helps decision making, isn't it? So anything comes in your mind, you can write it down, and these are correct. So we make income statement out of it, balance sheet, which you call a standard position, SOFP, and we provide information to in a meaningful way to the stakeholder. Guys, can I ask you, can you write me all the examples of stakeholders? What is the definition, by the way? Anybody? Stakeholder, these are people or parties. They can influence the business. Influence or get in. You can write as well by the. Yeah, these are people or parties. They can influence or get influenced by the business. Affect or get affected by the business, right? Right. So stakeholders, don't get confused, like stakeholder is a shareholder. No, stakeholder can be anybody who can influence or get influenced by your business. They can affect or get affected by the business. They can affect your business or get affected by the business. Why people are writing stakeholder? People who have a part in the business and actively who are directly or indirectly involved. Yeah, involved. Thank you. Um, uh, um, Working in business and they affect the business, vice versa. Yeah, good. Mohit has written in whose interest in the business can directly involved. Yeah, that's correct. Similar writing, and Ashraf is taking part. I appreciate. Right, these are all correct. You're doing good participation. Now, give me a few examples of stakeholders. Yeah, that can be internal, is external, or connected. Give me a random example. I have no problem. Yeah. Or if I say internal stakeholder, internal stakeholders, who are they? Internal. They're from the inside of your business. Yeah, Ashraf has written individual organization that get affected or put effect. Yeah, brilliant. Uh, right. Interesting answers I'm getting. Yeah, partners I will take, not the investors are connected. Yeah. Yeah, Mohit is good. Yeah, Abdurrahman, your partner is correct, but investors are connected in a minute, I'll tell you. So managers, employees, shareholders, owners. If it's a sole trader owner, it's a partnership partners, right? Employees, owners. No. Customers and suppliers are connected. Okay, Ashraf, connected. Slightly new knowledge, new items are coming in. Yeah. But yeah, employees are correct, owners are correct. Good. Let's write it down. The one you have written, all of you have written right. Some of you have written few extra, which is like needs to be modified. Such as you said shareholder. That's correct. In a company account, like public or private, their shareholders are the owners. Yeah, and they're also stakeholder owners. Owner means sole trader owner. Partners. That's correct. In fact, employees. And in the employees could be manager, supervisor, and all. I'll keep it till this. Connected. Connected, or to be honest, it can feel it's internal, external is in between. Connected stakeholders. I know whether these are given into the books. I would like to introduce myself also. I have few books. And, come on. I have written few books which are available on Amazon, such as, can I show you my books around somewhere here? Only two books are there in front of me. Yeah. Let me show you. I would love to see. Okay, I'd like to show you. Hold on. Now, the first one is for IGCAC, IGCC accounting, which is like metric, like metric. SSC in Bangladesh, we call it, with my photo. There's an ISBN you can find it. If you write down Cambridge IGCC Accounting Part 1 in Amazon, you'll find me. Another one is very interesting. It's for you people. Learn bookkeeping in 5 days. Incredible, isn't it? It's a bigger one and it's a little smaller one. So these are the two books. So, and in 5 days. Amazing, yeah. Bookkeeping. You're doing a bit of bookkeeping first. Later on, you'll go into the accounting. Bookkeeping is a day-to-day bookkeeping, right? Data entry, right? Like your boss has given you a lot of sales invoice or purchase invoice, yeah. So you're a junior person. You are not a full qualified accountant. You are a FIA qualified, probably, yeah, part qualified. So you are a bookkeeper. So this book is for bookkeeping. You can see things, contents in it. Right. Okay, as I'm on camera, so talking about internal stakeholder and then connected. Connected are basically customer and supplier, even investors, right? Who are external? External, and we're talking about stakeholders. Often students get on shareholder. Stakeholder means shareholder. No, shareholder is a stakeholder, but stakeholder is a vast, can be those people can affect your business or get affected by the business is a stakeholder. Yes, thank you. That's correct. Think more. Government. Mohit says government. Thanks for writing. Yeah, you're using keyboard. Yeah, that helps. I'm telling you, when you grow, it will help more. Like in FR, in all skills module, you need to write a lot. Right? Think more. Who are your external? Okay, let me write on the connected. Let's see. Supplier is a connected, customer is a connected, like they're kind of external, but they're connected to you very heavily. Yeah, often students think like, oh, they're internal. They're not. They're outsider, but they're connected. Supplier, customer, investor, even not the shareholder. Investor could be. Not every investor is a shareholder. Some investors are non-shareholding. Okay, an external. External, come on, think more. Mohit says government, I agree. Who are the other parties they can affect your business, both in a positive or negative way? More people? Okay, now can I get some answer from Abdurrahman and Ashraf? That will give me a confirmation that you are not fallen asleep within these 20 minutes. We've got to go a long way, isn't he? Okay, Abdurrahman is writing. Yeah, I agree. Government, I agree. Government, then bank, you said. Okay, Mohit, you are full stop. And yeah. Tax authorities, why not? In the United Kingdom, we call them HMRC, and you should be aware of these terms because you're doing a UK qualification, not a Bangladeshi or Pakistani qualification. Yes, you're right. It is a tax authority. That's correct. But in the United Kingdom, we call it His Majesty's Revenue and Custom. All my life, I have said Her Majesty's Revenue and Custom because Her means the Queen Elizabeth, who passed away. After she passed away, it became His Majesty. His Majesty is the King Charles. Labor Union, Ashraf, well done. Yep, I'm writing it down. We'll call it trade unions. Yeah, let me write down the better TR. Trade unions. Yeah, local community. Yeah. Now, all of them are interested in your business, are they not? It's not just influence or get influence. They have interest in your business. Can you write that one as well? They're interested. All of them are interested. All of them are in your business. Come on again, double and interested in your business. Different people have different interest. Now, if I ask you, the question comes like this, even. If I ask you, being an owner or shareholder or partner, what is like I'm the owner of a business or shareholder or partner of my biggest interest is my business doing good or not, profitable or not? Do I have enough money? Do I have good assets or not? Right? Being an employee, maybe some of you are already working. So what is your expectation? Or you're going to work. Your expectation is good job environment, job security, and good salary, promotion prospect, right? Mm. Supplier, can you write me supplier expectation or interest? What is supplier's interest in the business, also in the financial statements? The two things. Overall, being a supplier, what do you want? What you are interested in another business, or from your supplier customer relationship. Suppliers basically they would want to know whether they will get paid back on time or not, isn't it? And they will be keep supplying the goods. The customer will keep buying. And a customer, being a customer, my interest, I would like to have quality products at a affordable price. Investor, good return, security of their investment. Hmm? Government taxes and all. Um, Not just tax authority, government can be dealt with. Tax authority is a part of the government though, but the government is mostly concerned about are you doing the job legally or not? Did you take the trade licenses or not? Makes sense. Bank interested whether you are paying the interest or you can pay the interest on time or not. People have written if the supplier is giving sometimes the credit, he needs to know what the financial state of the credit limit. You are giving goes on credit. Are you going to get paid on time or not? It says the business can repay them back if the business running out of inventory. Oh, that was the supplier related. Why not? Trade unions, they are the voice of the labor. Ashraf said labor unions, basically trade unions, they're the same thing. The voice of the labor is a bridge between the boss people and the lower level employees. And local community means, your neighbors. Let's assume you're doing a coal mining business. You are polluting the area, local area, and the local area will be disturbed by you. So it's a negative. It could be positive, like you created so many jobs surrounding and local area is getting help. Right. So many talkie with one more new topic, not new topic, for many it's old, with one more topic, then I'm going to start the chapter. Okay. The topic name is, because you see, often I'm saying business, like you're thinking from, like they can influence your business, they get influenced by the business. So what do you mean by business? The business you are working for, okay, or the business you are running, for example. You always need to think from your business point of view. Can I give you a definition? Write it down. Business entity concept, you already know that. Business entity, come on. No, they didn't write properly. Entity concept, often known as separate entity concept. To see, I'm right here. Business entity concept, just 4 words. Your business is separate from the owner. The business is separate from the owner. That's it. Business is separate from the owner. Guys, I'm telling you, these are very heavy words needed. All your accounting, like business separate from owner, 4 words, heavy. All your accounting life, you need to understand this very well. Yeah, thank you, Mohit. Business is separate from its owner. Let me appear on the camera and I'll talk about it. Now, non-accounting people do this mistake very often. Like they don't want to understand, like my business is separate from me. Let's assume I'm going to start a new business. In the United Kingdom, chicken shops are very popular. We call it corner shop, chicken shop, pizza shop. These days, Bangladesh, Pakistan is getting popular as well, or India and other parts, Malaysia. But many years, let's assume I started a chicken shop doesn't mean I'm selling the raw chicken. Yeah, I'm slaughtering Bismillah Allahu Akbar and selling it. Yeah, you're gonna say, oh, sorry, Ilyas is wearing a topi and dari and is a chicken selling. It's a fried chicken I'm selling. Yeah, KFC style. Right. Right. A little bit fun. Yeah. Counting is dry, I know. It's a little bit fun. So I'm selling the chicken and chips, like chips means French fry, you call back that is called chips in the United Kingdom. Okay, more you say laughing. Yeah, a little bit laughter in it. Like Ashraf is or laughter all around. That sounds good, isn't it? Like you see, online lessons, we have good and bad sides. The good side is you are not traveling all the way to London to do the classes, isn't it? Or from Pakistan to Bangladesh or different. People are doing lessons from different countries. That's a true reflection of ACCA. Uh, but you're gonna say, come on, I love to come to London and do the lessons. So you don't need to travel and don't need to spend money, traveling money and time. Same standard of lesson, sitting at your own pace, sipping tea and coffee. Boom, good. Yeah, right. But the having a good time in a class is, yeah, isn't it? That's correct, Abdurrahman. Yeah, you learn with fun, you enjoy. At first, you have to love that particular syllabus. If you don't like it, oh, I don't like it's difficult. Yeah, it's really going to be challenging. Chartered, you're going to be chartered. Uh, I know I had my sleepless nights and can't tell you difficult times, but you will make it simple. Now, going back to our chicken and chips shop, chicken and chips means fried chicken. I'm selling it. You see, I'm selling over the counter. Let's say you might have few employees. They are frying the chicken behind me, back kitchen, and frying it and putting in front of me. These days, you have seen it, KFCs and McDonald's and all. I'm selling it. I sold, got £10. Again, sold £20, and sold. At the end of the day, I sold, let's assume, £4,000. I cannot say it's my money. Ooh, my business, not my money. Ooh, you're gonna say, why not my money? I need to say it's business's money. Businesses sells. Whose sales it is? Businesses sells. Okay, not my sales. Business sells. Okay, that is separate entity concept. Non-accounting people. Oh, I'm selling it. My money. I'm the owner. Hold on, it's your money, but not now. When you get the profit out of it, you can take out the profit. There will be taxes. Make sense? Then you can take part of the profit. Yeah. In shareholding, you call it dividend. In normal businesses, share of the profit, partnership, and the profit in the sole trader. So when you buy some goods for resale purpose, like I bought the raw chicken now, or oil, or the flour, pizza toppings, or the that's not my purchase. That's business's purchase. Now, if I bought a freeze or refrigerator or AC or oven or fryer, all the non-kind asset, I should not say it's my asset. Whose asset is this? Business's asset. Selling, business sells. Purchasing, business purchase. If I buying on credit, people are those supplier are my trade payables. Yeah, right? I believe you have done FA1. Who has done FA1 already? FA1, FA2? Many of you have done it, isn't he? Yeah, Abdurrahman has done it. I believe Mohit has done it. How about Ashraf? You've done it? Yeah. So you already know what is a trade payables, yeah? Like, so you and business is completely separate. Buying, business buying. Done it, okay. Selling, business selling. You took a loan, business took a loan. Business is liable. How about you put some money into the business? That's a capital. Owner put money into the business. So you always think business point of view. Makes sense, everybody? You always think from your business point of view. Any transaction, business point of view, life would be easy. On to the chapter now. Well, many more talky we can discuss, but let's get into the chapters. Almost more than half an hour. So yeah, these are the items we're going to talk about in this chapter. Guys, financial accounting and management accounting. I'm going to highlight here. 4 to 5 items are there. Financial accounting is basically for internal purposes. Where it is written? Can I write down for you quickly? Financial accounting. You know, this book is financial accounting. Financial accounting is for internal purpose. Sorry, my bad. My bad. Financial accounting for external purpose. External. What do you mean by external? We prepare in SPL and SOFP. Later on, see profit and loss account is a financial position. Why? We publish it onto our website. Or if you are a public limited company, you must publish on your website, also newspaper. Makes sense. And these days, mostly website, external. And management accounting, we do internal purpose. Management accounting, we do not for all the stakeholders to see, only internal decision. Internal purpose. Makes sense. Why? What do you mean by internal purpose? Controlling, planning, and decision making. Yeah, that's management accounting. MA, paper MA is management accounting. Financial accounting, remember, there is a set form pro forma. Set, pro forma, layout. You have already, those of you have done FA1, FA2, you have seen SPL and SOFP has set pro forma. In this chapter, I will show you. But there is no set pro forma for management accounting, like budgeting. No set pro forma. I'll show you the pro formas in a minute. You'll see those pro formas, income statement and balance sheet, right? In a balance sheet, what do you start with the balance sheet in financial position? Non-current asset plus current asset minus current liability, non-current liability, right? That is called pro forma. It's required by law. By law, you have to prepare financial accounting, which is SPL, SOFP, if you're a public limited company, even private in the United Kingdom and many other countries as well. You have to prepare it. And if it is a bigger company, auditing as well. But there is no legal requirement, no for management, right? So more or less similar items should be given here, right? This is your financial and management accounting. We can go a little more talky. And yeah, planning, controlling, decision making is your management accounting. Guys, this is what we already have finished. Investor, customer, supplier, lender, government, competitor, public. Public means local community, could be employees. Management means the part of employees, like senior manager. Yeah. And we had our discussion. We don't need to go over this one. Stakeholders. These are stakeholders. Can I test your knowledge? Can anybody unmute and read this test your learning 1? Who is our volunteer going to be? Abdul Rahman, can you unmute yourself, please? Let's talk. Sir. Yeah, thank you. Hold on. Hello, Abdul Rahman. Welcome. I'm putting my volume up. Yeah, can you read this test your understanding 1? Which?
Sure. Which of the following users do you think require the most detailed financial information to be made available to them?
Interesting. Very interesting. Now, you see, they said which of the following users you think? Number 1, users. Then most detailed in financial means all in income statement, balance sheet, all this. Yeah. So I'm reading this. Do you think the competitors needs the most detail, or management, those people working inside, or trade unions, or investor? Who needs most information about financial information like sales, purchases, then assets, liabilities, loan, equity? Who needs? Yeah, go ahead.
I think it's going to be investors because they're obviously investing in the business and they need to
Okay,
know
that
how
can
the business.
be. Okay, that can be like, to be honest, investors are only concerned about two. They are investing money. So are they gonna get money back or not? Like with return and capital, the money they invested. Okay.
Yeah.
If it's a bank, interest and money they invested. Okay. That is investors too, not the most means everything is basically, this is a dodgy one they started, to be honest, huh? Management of the entity. Why? Management is basically employee, manager, supervisor. They need on a daily basis all the information: sales information, purchase information, sales return, purchase return, how much money you have, bank overdraft, what are your profit and loss. An investor is not bothering about sales and purchases. Makes sense. He's bothered about, is he going to get return? Is he going to get his like profit and the money invested? Does it make sense, Abdurrahman?
Mhm. It does make
Yeah.
sense.
Yeah, brilliant. So don't, that was a good conversation you started, because you said, investors, they would like to know most of the financial information. That's correct. But the most here, they meant to say almost all the information needed by the internal employees. Okay, TK.
Okay, sir.
Right. Thanks for your participation. I really appreciate. You can mute and we move ahead. And although they said types of business entity, basically it's type of business. There are three types of business, I would rather say. One is sole trader, one is partnership, one is limited liability company. Can I say service-oriented business? Not yet. So even they gave you some examples. So we can very quickly finish this toki here. Sole trader, when the owner is only one. And I know you already know many advantages and disadvantages of sole trader, isn't he? He's the only owner, takes all the profit, takes all the decisions, and decision making is quick, isn't he? And disadvantages are all the losses shared by him, decision may go wrong, and although decision making is quick, they has little money, yeah, less capital, isn't he? Less capital. Yeah, the video is recorded, so you can watch it. And no, if he falls ill, he becomes ill, who gonna cover him? And these are the alternative for partnership. In a partnership where two or more people doing business, two owner at least, and the advantages are you have more capital, and although you learn capital account, current account later on, you have more capital, you have more expertise, isn't it? More expertise, like us four, me, you, Mohit, and Ashraf, we started a business, our chicken shop business, let's assume. So maybe I'm good in doing selling, you are good in doing cooking, Mohit is good in doing marketing, probably. Ashraf is good in bringing customer marketing again, or accounts, probably. So expertise. This is called expertise. Hmm? And limited liability companies could be public limited companies known as PLC, private limited company often known as LTD, denote, not just known, denoted. And the biggest advantage here is liability is limited by number of shares. Do you understand this word, the one I just shared, everybody? Your liability is unlimited. Oh, that is the biggest disadvantage in both sole trader and partnership. Like, for example, if you took a loan of, let's assume 500,000 loan, you have taken a loan, your business couldn't pay, doing bad. You have to sell your personal belongings in sole trader, also in partnership. Am I understood? Then you have to pay the £500,000. This is called liability unlimited. But in a limited company, like if you have PLC and LTD, your liability is limited by number of shares. Let's say you bought shares in Tesla. The guy is the richest guy in the world now, Tesla. So let's assume Donald Trump has done something very bad with him, and something bad happened indeed, and Tesla is losing, which is very unlikely. And you have some shares, and now Tesla is burst out, gone, liquidated, and Tesla lost, I don't know, 2 trillion pound, and you own maybe 20,000 pound in it. The question is, are you going to repay the 2 trillion from your own pocket? Answer is no. You're going to lose your 20,000. That is called liabilities limited by the number of shares. Of course, you can make some good notes while doing this um, sole trader partnership and limited liability company. Companies, if you compare to sole trader and partners, companies can buy property in their name. Company can sell their shares if it is a public limited company. A company can sue and being sued, that's another, like they work as a legal entity, separate legal entity. This is not business entity, this is separate legal, separate entity. Yeah, a company can sue and be sued. So directors are saved often. You get more loans if you have a company. There are taxation, companies tax separately, which is called corporation tax. Disadvantages are a lot, of course. Incorporation, guys, what is the meaning of incorporation? When you register in a company's house. Company's house. And what do you mean by company's house? It's like office. Okay, in that office, your company needs to be registered. That's called incorporated. So sole trader and partnership are unincorporated, right? And our company, whether public private, is incorporated. There are so many disadvantages. Number one, it takes a lot of registration process, filing process, and money, fees. Yeah, we call it red tape. What do you call it? Red tape. Okay, there is a TAP. A lot of bureaucracy. Red tape means bureaucracy. Go to this office, that office, incredible. Shukr Alhamdulillah, in the United Kingdom, this is very easy. Like the red tapes are little. You don't need to go this daftar to another daftar to office and put some extra money or the bribing and all. You see? Can I tell you just, I had to register into joint stock, one of our charity called Team Big Iftar. And we needed to give this office, that office, this office, and in Bangladesh, and needed to give 50,000 bribe. So, hassle. No, it doesn't happen in the United Kingdom. I'm telling you, very transparent. Yeah. Right. So, you have to produce financial statements annually and needs to be audited if it is a public limited company. Documents needs to be inspected. It should be open, should be shown on your website and all. And yeah, it's strict rules. You cannot withdraw the capital and profit. The directors will decide how much dividend to be paid. And shares are transferable, but cannot be sold back to the company. Like if you bought a share of a company, you can sell these shares to another person or another company, not to the company itself, where you bought it from. Like a partnership, you joined in a partnership, you worked for 2 years, then you said, sorry, I would like to leave. You take your money, go back. Who gives you the money? The partnership business. But in a company, the business doesn't give you money back. You need to sell the shares. So members often doesn't take participation in management. Directors do take if it's a public limited company. Private limited company is smaller. Right. Okay, a few more minutes we continue, then we'll take our intended break. All right? Right. There is a framework, we call it conceptual framework, and it is prepared by IASB, International Accounting Standard Board, which you'll see more in chapter 2. And there's IFRS, so that they govern or monitor accounting progresses, yeah? Purpose, objective, quality. We're going to see quality in a minute, a bit of definition. There's some concept, accrual and going concern. I'll go over in a minute, don't worry. Capital and revenue expenditure. Capital maintenance, not in the syllabus. Yeah. Purpose of the framework is to assist the ISB to develop FRC. Recently IFRS 18 came up. Instead of IAS 1, there's IFRS 18. So that is their purpose, to help each other regulate the accounting standards. Main objective is to provide financial information about a reporting entity. What is a prudence concept? Taking a conservative approach, view towards your financial statement. Cautious approach, not to overstate asset, not to overstate profit. Caution, cautious approach while taking decision. That's a bigger part we just finished. I'm going to another part before the break. 5 minutes, we'll discuss this qualitative characteristic. There are 2 fundamental qualitative characteristics and 4 enhancing characteristics. Ask me, characteristics of what? Qualitative characteristics, Ilyas, what? Of FS. Of your financial statements, okay? Right? I will finish the discussion here, then you'll make some notes from the bottom. Fundamental quality, like FS. What do you mean by FS? SPL, statement of profit and loss, which we often call it income statement, and SOFP, statement of financial position. And in your syllabus, there's a cash flow statement as well. Cash flow statement. These 3 are FS. There is a notes that are part of the FS, but not the FS. Director notes. Now, you are making an income statement or a balance sheet or this. Come on, it needs to be relevant. If you're preparing it, you're preparing at first for the stakeholders, external people. They will watch it, see it, and see the performance. And before that, it will be gone through the directors. They need to improve it. So if you're preparing and director going to watch it, you're going to put relevant information inside. Am I understood? And not the irrelevant, like you are doing income statement for the relevancy could be many different aspects for Pakistan segment, but you input the UK segments as well. That is irrelevant. You are putting so many irrelevant data from last year or competitors, not needed. Okay. Or other way around, you put some information which are not relevant at all. The biggest chunk you missed out, the sales, the purchases, the investors, you might have missed out, and you put some irrelevant extra jargon. You made it very difficult for non-accounting people. That is relevance. What is faithful representation? Should be truthful. Faithful means true figure. The FS you produced should be true. In the audit, it should pass. True and fair. Honesty should be, you can trust it. Okay. One is irrelevant, where you cannot put irrelevant items. And one is honesty. It should be true and fair. True and fair. Of course, you'll make notes after. Then for enhancing, guys, those FS you're producing, you can compare last year with this year, or your company or another company, the same trade. Like if we are education business, KBM, you can compare with scans probably of the Banis, or in the Bangladesh could be London Educators, or there could be some more different colleges, like how good or bad we're doing. Yeah, comparability. Verifiability is basically you see, trial balance, bank reconciliation. These are the tools of verifiable. Like you can inspect and verify. Yeah, transaction took place. How can you verify? You count the cash, verify. Timeliness, meeting the deadline. You submit the accounts on time, not after the deadline. Understandability is less jargon. Less jargon means you make the FS in a simpler way, so your boss can understand. Let's assume you work for an engineering company. Now, the owner is an engineer, he's not an accountant, and you're using very difficult jargon, very complex accounting. The boss is saying, come on, I didn't understand. Tell me in simple words. So that is understandability. And that's where you need to make notes on all this. Am I understood? Okay. All the way down here. All right. So that's our session 1. We'll have our 20 minutes break right now. Is it okay, everybody? And after the break, it's 3 o'clock-ish right now. We'll come back 3:20. So enjoy your tea, coffee, any, I don't know, prayer time in your country. Salah time, probably. Yeah. What do you say? Imoy says, okay. All right, from Abdurrahman. Okay, guys. Thank you. Thank you, guys. See you 3:20, sharp 3:20. I'll be back. So I'm putting on mute. Hi guys, welcome back. Sorry for being 2 minutes late. It's 3 minutes to be honest now. If you're there, you can say hello to me. We are back after the break. We meant to come back 3:20. Who is there? Yeah, people are writing. Hello from Mohit. No problem from Abdul Rahman. Thank you. And Ashraf is writing. I believe you're writing. Hello, and it is welcome. Moving on to our topic where we left last time. All of you have done FA1 and FA2, so I believe you have this knowledge, which is basically the elements of FS. In the financial statements, what are the items you write? That is called elements. If it is a SOFP, statement of financial position, you start with asset, don't you? And what is the asset? The items you own, controlled by the entity, controlled as a result of past event. They're very difficult definition they gave you. Like asset, can you write down items owned by the business? Owned by business, okay? And like you own a land and building and motor vehicle and office equipment. Now you can say it's your present economic resource. Economic resource means it's an item, and you control, and it happened in the past. Makes sense? That is the meaning of this definition. Like in the past, maybe 5 years ago, which is a past event, you bought the asset, and it's your resource now, and you control it. Means you own it. That is that. Liability is your obligation. Again, it happened in the past. You took a loan. Economic resources, like you took some money, resources, transfer of economic resources means you took a loan, liability, like bank loan. Equity is the shareholders' money, yeah? Asset minus liability equals to equity. Asset equals to capital plus liability. Asset minus liability equals to equity. Okay? This is basically equity. Equity means capital. Now, these two are SPL item, a statement of profit and loss, known as income statement as well, income and expenses, income minus expenses. So assets are categorized to number one, non-current asset, also known as fixed asset or long-term asset. Non-current items are not current, like tangible, you can touch it, you can see it, you can feel it. Not held for resale. Huh? Not expected to be realized within the 12 months. Like you're going to sell it within 12 months or finish it within 12 months. Realize means finished. So many examples, as I said, land and building, motor vehicle, office equipment, fixtures and fittings. Yeah, all these are non-current assets. Do you buy a motor vehicle or like I own the chicken shop? So the freezer I bought it, did I buy for resale? Answer is no. It's for not for resale purposes. Current assets utilized within 12 months. You can write it down. Or held for less than 12 months. Is it okay? Less than a year. Little writing is recommended, everybody, okay? Oh, some people are writing. If you're renting, that is not your asset. Yeah, you're welcome. Yeah, that's an expense. Rent, you're paying a rent, living someone else's property. But if you own it, somewhere I have written it, items owned by the business is an asset. But some items are held in the business for less than 12 months time. These are more than 12 months time. Yeah, more than 12 months plus. And these are less than 12 months time. For example, inventory, receivable, cash. Give me two more or one, two. In this inventory is closing inventory. Okay. Trade receivables, cash. Another one is bank money. Okay. These are current asset. Also, prepayment of expense. Prepaid expense, which you will see later on. Liabilities we owe or items owed by the business, okay? items owed is a non-current and current. Non-current means long-term liability and short-term liabilities. It's more than 12 months time. It's less than 12 months time. This liability held in the business for more than 12 months time. It's less than 12 months time. Such a bank loan and such a trade payables, bank overdraft, or any short-term loan. Right? Right. This time, who's gonna participate? Ashraf or Mohit? One of you need. Last time we had a volunteer, Abdurrahman, but would like to have a new volunteer. That's an easy one. Yeah, come on, unmute and go ahead. The volunteer. Mohit is typing. Let's try something. How about Ashraf? And yeah, come on, be my guest and go ahead. Okay, Mohit says my mic is not working. Okay, but tomorrow we have a class. Make sure the mic is going good. How about Ashraf? Don't be shy, yeah. Okay. If no more, Abdul Rahman can go ahead. Is our volunteer for today, Abdul Rahman.
Yes. Am I
Yeah,
audible?
brilliant. Yeah, you are. Go ahead, please. Read it. Classify.
Okay. Classify the following items into current and non-current assets and liabilities.
Easy
Land
peasy
and-
lemon squeezy, help me. Yeah.
Yeah.
Land and
So
building.
land and buildings are non-current assets. Receivables
Thank you.
are current assets.
Thank you.
Cash is a current asset.
Thank you.
Loan repayable within 2 years' time is a non-current liability.
Non-current. Why? Because it's more than 2 years. Non-current liability. That's correct. Thank you. Payables.
It's a current liability,
Thank you.
and that's a non-current asset.
Non-current asset. Easy peasy lemon squeezy. Thanks for participating in the session. Later on, we will participate heavily. Okay, everybody. Now, can we go through the pro forma of FS? Statement of financial position. Guys, in the statement of financial position, you write asset, liability, and equity. Is that okay? I repeat, asset, liability, and equity. But there's a set pro forma layout, this financial accounting. And the layout is like this. You start with the heading, statement of financial position. And then you start with non-current asset is the heading. What of the non-current asset? Current asset or the current asset. You write it down together, you get total asset. These are your asset. Different forms are there, but this is this. Learn either way. Later on, you'll learn there's a depreciation. There are 3 columns you're going to see. So I'm not bothering that much. Now, asset. Did we not do that equity is asset equals to capital plus liability or equity plus liability? This is the accounting equation. Okay, everybody? So we got our asset. Now we're going to get equity and liability. Here it is. Equity and liability. Equity share capital. £1 share, there are 40,000 shares and total 40,000 money in it. Share premium. Later on, you issue shares at a premium price. Revaluation reserve. Non-current asset value gone up, revaluation reserve. Retained earnings. This is the profit kept over profit over the years and years and years, retained earnings. So that's total equity, 90,000 whatsoever. Then you have non-current liability, which is long-term liability. If your year end is 17, this held for 2 years, so 100,000. Can I ask you, what do you mean by 6%? Everybody or anybody? What do you mean by 6% loan? What is the meaning of it and what is the implication of it? Yeah, you can write me, you can talk to me. Okay, Abdurrahman is writing. Can I get more people writing? Thank you. That's simple answer. Can you calculate how much it would be? That's correct. 6% is the interest on the loan. That is the simple answer. So it's 600, isn't it? 10,000. I'm an accountant. I trust my calculator. So even if it's 2 plus 2, I believe in my calculator. 600 is my interest. So interest, is it a liability? Is it an expense? What it is? 600 is what? Interest, also known as finance cost. Okay, finance cost or finance expense. This is an expense in short. So it goes into the income statement, not the balance sheet. Then you have some current liability, payables, bank overdraft, tax liability. You know, this tax liability also goes into the SPL, and interest due. That means, although we calculated 600 is interest, but you didn't pay all of it. You paid 300 and other 300 is due. That is like we are assuming because that is in front of us. So your equity and liability to this two liability basically makes it total equity and liability. Okay. Right. How about profit and loss statement and other comprehensive income? Statement of profit and loss, OCI we call it. So profit and loss and other comprehensive income. It look statement of profit and loss, other comprehensive income. Yeah, statement of profit and loss, other comprehensive income. You start with the sales, less cost of sales, you get gross profit, less other expenses, you get operating profit, less finance cost. This is your finance cost, okay? Interest. You get profit with tax, less tax, you get profit of the year. And other comprehensive income is, what? Basically, revaluation reserve or surplus is your other comprehensive income. Although I didn't see the question, we're doing it from answer. The question, they'll clearly tell you how much is revaluation. It's just a pro forma. Total comprehensive income. Yeah, there is a one item which is part of this changes in equity. I mean, we call it SOCI, a statement of changes in equity. Statement of changes in equity that goes into the equity section basically. In the balance sheet, in SOF based on financial position. What do you mean by that? Share capital, share premium, revaluation reserve, retained earnings, It has some changes. At the beginning, you had this much, 34, 1100, 3000, 25,000, and total. So can I erase and talk? In the statement of changes in equities, basically, you start with opening. This is opening balance, plus profit for the year, less dividend, plus share issue or revaluation reserve, plus revaluation reserve, plus share issue equals to closing. Okay? All right, I repeat. You start with opening, number 1, plus profit for the year, less dividend, number 3, plus revaluation reserve and share issued. Sometimes profit and revaluation reserve written together. Like, profit we have written here and revaluation reserve we could have written there. Instead of 2000 here, we could have written there. Now, what we are doing, we are basically working how much change is made in my equity. At the beginning of the year, I have 34,000 share capital. Later on, I issued 6,000. How much now? We have 40,000. This is my closing. Does it make sense? Share premium at the beginning, 1100. We issued some shares during the year, 900. Total share premium is 2000. Revaluation reserve at the beginning was 3,000. All the beginning items will be available into the trial balance. And during the year, there was more revaluation. So total reserve is this. Now, this is interesting. Is opening retained earnings plus profit minus dividend, you get closing retained earnings. Okay. And you see these closing values, it's gonna go into the balance sheet as an equity. Statement of financial position equity. 40, 2000, 5000, 43, 650. It is basically this. 40, 2000, 5000, 43,600. This is basically that. Okay. That usually when I teach GCSEs or A levels, I'm also head of a sixth form college in London. So where we teach GCSEs and A levels, I make them write down these performers. But because and those of you have not done any FA1, FA2, I also make them write down these performers. Like you should write these performers in your notebook in XX figure, but I'm not repeating those for you. I believe you know how to do it. All right. We're going to few more theory concept, accounting concept. Slowly, steadily, because all these are important. While doing accounting, you need to keep some concepts in your mind. Number one is materiality. Materiality means, is it significant or not? Any event, yeah. So if significant items, you need to show it. Material items, you need to show it. Immaterial items, you can ignore it. Like thinking be different. Like it is misstated by £1, so £1 is very immaterial. But if it is misstated, the mistake is by £100,000, that is material for you. Yeah. Substance over form is basically present the information faithfully, not just legal. Economic reality must be accounted. Faithful. Substance over the form. You need to put emphasize substance over its form, not just the legal form, huh? By law, something else, but reality, something else. So faithful representation is substance over form. Going concern, your business must continue in the foreseeable future, not closing down the business. So we open a business, aiming it's gonna go on and on. Business entity already saw it. Business is separate from its owner. Accruals. Accounting is based on accruals. Cash flow and cash book are based on cash basis. What do you mean by accruals? The answer is irrespective of money being paid or received, you record in that particular accounting period. The wordings may be heavy. Can I give an example? Accrual is an important concept. All these are important, but accrual comes in the exam as a accrued and prepayment way. Let's assume January you started your business. When do you finish it? Accounting period is basically 12 months. December you finish, don't you? Right? So anything relates to this period, you need to take into account. Beyond that is a minus. Within this period, if you didn't pay anything, you need to add it. So accrued, you add. Remember, accrued, anything due, accrued or due, we add, okay? Closing accrued, basically. We add. And prepaid, like you paid something for next year, January, March, we minus. Prepaid, paid in advance, we minus. Thank you so much for participating. So what is accrual concept? Accrual concept means no matter whether you paid or not, received or not, if it relates from this January to this December, write it. What example, real life example. For example, every month my rent is £500, okay? So 12 month should be £6,000, right? I did not pay December rent. I pay 5,500. I didn't pay 6,000, 5,000, or I didn't pay December rent. Or could be 2 months, November and December. November and December, I didn't pay. How much I paid? I paid 5,000. 1,000 due, isn't it? The question is, into the income statement, how much are you going to show? The cash, the one you paid, that one. Answer is no. Accrual basis says, irrespective you paid or not, you show this full as your expense. Hope it helps, huh? 6,000 should be shown. A 2,000 is added. Sorry, 1,000 is added. Accrued is added. Okay, accrued, like 5,000 plus 1,000, you're going to show fully as your expense. But isn't it 1,000 in liable? You're still liable. You're liable. That's all a current liability. How about prepaid? Now, it's not just 6,000. We paid, let's assume 6,500. So 6,500, isn't it? We paid 1 month extra. Next month, January, you also paid. But can you show the 6,500 as an expense into the income statement? Answer is no. You're still going to show it 6,000 as an expense. 500 should be minus. 6,500 should be minus. We get 6,000. So 500 is prepaid expense, which is a current asset. Why it's a current asset? Because you're going to enjoy the services you paid in advance. It's good news. Although money-wise not. Money gone. We're going to do accrual and prepayment in deep detail later chapters. Going over quickly, prudence concept, taking conservative view towards your financial statements, not to overstate asset, not to understate liability, not to overstate profit. Yeah, prudence concept, cautious approach. Consistency, any accounting method you're following should keep following that consistently. Like last year, if you're following straight line method depreciation, this year you should carry on following straight line. It's not all on a sudden you jump to reducing balance or declining balance. Or last year, if you're following FIFO method of inventory, this year you should follow the same FIFO, not FCO, unless there is a solid reason of it. Right? Offsetting is basically a net off or contra. Recording presenting net off. We also call it net effects. It is the information available. It's a contra entry, contra string entry, which helps you to do less entries. Duality is a bigger concept, double entry concept. Every transaction has got two effects, okay? Two effects. One is debit, one is credit. And finally, historical cost concept. Our historical cost concept says if you bought a non-current asset that should be shown onto the balance sheet, the historical cost. Like 5 years ago, you bought an item for 100,000. Even today, you're going to show it as 100,000. Depreciation is deducted. That is different story. But cost should be cost. 100,000 should be 100,000. Nearly done. Mohit says your what doesn't work microphone. How about Ashraf? This time we're gonna be a volunteer. Ashraf or what happened to Ashraf? Your mic is not working or anything? Come on. Which of the following statements are correct? Read. Only tangible assets, physical substance, are recognized into the financial statement. Why? You also recognize what you call current asset as well, isn't it? Not non-current asset. Okay, sure, no problem. Sure, don't worry about that. Isn't it? So is it true or false? First one is false. What is the question? True. So one is not true. So A is not true. Okay. We are left with C and D then. Number two, faithful representation means that the commercial effect of a transaction must always shown in the financial statements, even if these differs from, this is called substance over form, basically. This is correct. Yes. Even if your legal form is different, but commercial effect, real effect, any transaction, always this should be shown. That is, to be honest, correct, but hold on, let me read the next one. Application of the accrual principle means that if an entity makes a profit, it will not. This is a completely different question, but it can be overdrawn. If you are profitable, but you are overdrawn, it can be. So this is false. This is false. This is a good scenario to talk about. I'll come back and talk. Correct answer is this. So C is the right answer here. Let's talk about this more. This is a bigger question. It comes up soon. Let's assume my business made a profit of £2,000. Let's assume, yeah, 2,000. But in my bank account, I have 5,000 negative. If you have profit, you should have positive money, shouldn't you? But you have a negative money. That can happen. That is true. So this statement is not true. Why? What are the reasons? Think about 1, 2, and 3. Can you think about some reasons? Or at least one. There are 3 popular reasons. Like your business is profitable, but you have bank overdraft. Yeah, that is possible. That happens. What are the reasons? Think about it. Write me. Then we will finish our lesson early today. Yeah, write me. Some people are writing. Yeah, people are writing. Yeah, I'll wait for your writing. Everybody should try. Business is profitable. In the bank, there is no money, rather minus money. Why are the reason? So I give you some time. My style is I give you this way. I give you 1, 2, 3, 4, 5 minutes for this. Keep writing to me. 5 minutes started right now. You are on, I'm off. Brilliant. I'm getting some writing already. Abdurrahman says business can have bank overdraft even if they have no draft. For example, takes a loan to buy gold. They may profit net, but all the goods, sorry, takes a loan to buy goods not been sold yet. Loan is a liability. Yeah. And unsold goods. Okay, selling, I'll come back. Cash flow and the real cash of the business holds and profit include cash item like depreciation is a non-cash expense. Okay, keep writing. We have 3 more minutes. Yeah, we'll talk after. Yeah, few more writings. Yeah, 2 more minutes. More answer. That's from Ashraf or more from Abdul Rahman. The business got a loan to buy non-current asset production. The bank is in an overdraft, but the business is actively making profit. Yeah, good one. But I'll give you one more here. Business can be profitable but lack cash because the cruel concept reports revenue and earned well the balance are fantastic. Yeah, that's a very good reason. That's what I'm going to write in the number one. Yeah. Ashraf, due to uncollected receivables. Yeah, brilliant. Yeah, receivables. We'll start with the inventory build up, non-expense cash outflows like loan principal or asset purchase. Thank you for a very good participation, everybody. It's not even 5 minutes. You've been giving me very good answers already so far. So you see, the first answer I would like to start with, credit sales. Yeah, credit sales. Guys, tell me whether cash or credit sales makes your profit up or down. Sales makes your profit up. Yeah, but because of credit sales, do you get any money? Do you get it? No. Yeah, thank you. Profit up is correct. That is correct. Both of you. Profit up. Profit is already up. So my profit is up 2000. But in the bank, there is already a minus. So no money coming in. Maybe already a bank overdraft, but no money coming in. Number one. Now, um, you see, some of it, that is one is credit sales. Another one is, your non-current asset. Non-current asset. If you purchase of non-current asset makes your bank down, isn't it? You had a maybe zero balance, that becomes negative. Or you have some balance, £2,000. If you bought £7,000 worth of items, it becomes minus 5,000. Non-current asset purchase. But does it affect your profit? Your profit is not going down. So purchase is you're buying some non-current asset, making your bank down minus from 2,000 positive to negative, whereas your profit is same. That is another reason. So credit sales, purchase of non-current asset on credit, and accruals. See, income or even expense wise either. accrued or prepayment of expenses. Yeah, you see, prepayment or accruals of expenses. Let's start with accrual concept in short. Accrual concept. I gave an example here, like 6,500 or 6,000. You know, we paid for money out 500 each month, but we paid 11 months, 5,500 we paid. So money gone down, 5,500. But in the income statement shown as expense, 6,000. Why? Accrual concept says show the full year's expenses. So expenses are higher. That usually makes your profit down, but doesn't affect your cash. This is the third one is a vice versa answer. Like your cash can be different compared to your profit, or your profit can be different compared to your cash. So you need to think both way as well. And that's it. These are your answers. Can you check the answer? We do have these answers somewhere here. Yeah, these are our answers, tested learning 1, 2, and 3. Yeah. And we have gone some extra mile as well. So if we do the chapter summary, we talked about sole trader, advantages, disadvantages, partnership, advantages, disadvantages of company, advantages, disadvantages. Bit of financial accounting, management accounting, stakeholders, and statement cash flow. We didn't talk about it, but cash coming in and out, estimate changes in equities, profit and loss, financial position. These items we have seen detail. And what items goes in it? These items goes in it. Characteristics we have gone through detail. Make sure you make good notes while doing self-study home. That is it in this particular chapter. Now, we'll start this chapter to our why. Today, I'd like to show you Study Hub. This is basically Study Hub chapter 1. Okay? ACCA Study Hub. And what comes in it here? Similar items. Types of business, sole trader partnership, limited company, definition, yeah, stakeholder. Can I show you all of it? Type of a business is sole trader. Advantage, disadvantage. Some activities. These are good to do some activities. Can I do the activity? Although I can see the answers at the bottom. Like, which of the following is most likely to be interested in sole traders' financial statements? And which of the following statements about the sole trader are true? The answers are given at the bottom. So then partnership, we've done all of it, you see. Advantages, disadvantages, limited companies, advantages, disadvantages, business arrangement. And these are the solution here given. Yeah, you see, because I've gone all of it already, so not repeating the explanation. If I find anything new, you see all the answers are given. So it's there. Financial accounting, reporting, analyzing, summarizing, and see anything new in this particular chapter. Still for profit and loss. I'm going over all of it. See, cash flow. I didn't go over cash flow fully, but cash flow is money in and out, operating activities, investing activities, financial activities. We'll do it later chapter. So financial position is a balance sheet. This is a balance sheet pro forma, which saw it. In ACCA, they go through total asset equals to capital plus liability. Capital means equity, basically. Yeah, they said it capital, or you can call it equity as well. Capital plus liability. We've gone over all this explanation more than 12 months time, less than 12 months time. And these answers are given false, false, true, false. Statement of profit loss and other comprehensive income, which is income statement. Yeah, income statement, they have done little elaboration, which is good. Let's talk about it. You can start with sales, less sales return, you get net sales, okay? And under cost of sales, what comes in it? Opening inventory, plus purchase, less purchase return, less closing inventory. You get cost of sales. This cost of sales you take away from the sales to get your gross profit. Call it GP. In the United Kingdom, GP means general practitioner, doctor. So this is not your doctor, this is gross profit. The higher, the better. With that, you add other income, less expenses, get net profit. Oh, this is a income statement for sole trader. And here we saw an income statement for company. You see this income statement, everybody? Changing the color of my pen. Highlighting as well. This income statement, this is for company. Is it okay? That's why there is a tax, there's a finance cost separately and other comprehensive income. And here, this one, uh, there is no tax. So this is not this is for sole trader. Yeah, property gain is there. That's all right. Cash flow. They showed you a little cash flow. Let me show you. Later on, you'll see. From three different activities, you will get money. Operating activities, investing activities, financing activities. Operating means buying and selling. There are set pro forma. We'll talk deep detail. Cash from operation, interest tax, uh, then cash from investing, like you purchase money, property, money goes down. You sold a property, money goes up. You received interest, money goes up. Paid dividend, money goes down. Likewise. Financing means you have financed some into some shares, got some money, money goes up. Repayment of loan, money goes down. Dividend paid, money goes down. Likewise. We'll do cash flow detail. Changes in equity is this, which I've gone through in detail. And I have a YouTube channel or accounting lecture. You will find these relevant videos. I will try to send you those are relevant to you. Statement changes in equities. I have a good video. Income statement balance sheet. Stakeholder, we've gone through deep detail. They said internal, external, customer, supplier, all external, not connected. Okay, apart from owner and employees, everything is external, all right? But yeah, these two you can say connected. Although this is ACCA book that didn't put the most updated. I have shared with you most updated, but for your exam purpose, if only internal external given, customer supplier external. Obviously, these are external. That's it. Yeah, there are a bit of quizzes, which is good and interesting. That's it. Next chapter from them is a double entry. From us, it is regulatory framework. Can I, in fact, cover a little bit of regulatory framework, everybody? Yeah, not long. Only one test you're learning is given. Not a long one. Yeah, I can give you this as a homework. It's a theory chapter. Huh? Next chapter after is basically, can I see? Why not? Yeah, thank you. Yeah, we have time. Yeah, it's a theory. You will make notes, that's it. Not more than that. But yeah, I will go through the explanation. Yeah. So a regulatory framework, the bodies ISB, IFRS. Yeah, they set down the rules to ensure the needs of user financial statements met with at least basic minimum information. Yeah, all the information are relevant. It gives confidence to the users and regulate the behavior of the companies. Like even IFRS, IFA is there. They are the regulatory body. To a certain extent, ACCA is also ACCA also regulates so many businesses in the United Kingdom. Typical regulatory structure is National Financial Reporting Standard, FRC. In Bangladesh, there is FRC, probably in Pakistan, in the United Kingdom, IFA is there. National law, which is basically parliament. Market regulation, security exchange, like shares and security exchange. Yeah. So in the UK and US, these are given. So they are the regulatory bodies. Accounting standards, there are IS and IFRSs. IS are replacing by IFRS, ISB, ISC is they're being replaced by IFRS. Foundation is the supervisory body of IASB. Principal objective. You need to make homework notes. Again, develop set high quality, understandable, acceptable reporting standard. There are so many reporting standards. IS1 is accounting standards, IS2 is inventory, IS7 is cash flow, and likewise 16, 38, 36. Yeah. And you promote the application of it, take account the financial reporting needs in the economy, and likewise. There's an advisory council as well. Highly encouraged to make notes on it. You'll see quite a few repetitive. Yeah, let's talk about this one. Company ownership and the control structure, basically. You see, who is a company owner? Basically, the shareholders, right, everybody? Not the directors. Directors are the manager, basically. If it's a small company, private limited companies, directors can be the owners. Yeah, so shareholders are owners, directors are the management. Directors, shareholders own the company, directors control the company. In the annual general meeting, they can vote who can be a director, what type of director, different agendas they can vote on. So these are all being set more or less here. Yeah, this needs to be audited. If you're a PLC, public limited company, from the external auditor, your FS needs to be audited, and they need to give it true and fairly stated. True and fair, your financial statements are prepared, and this is the director's responsibility to get the FS audited. Internal audit could be there as well, which is a good corporate governance showcase. Even if you're a small business, you can go through the internal auditing process. If you have an internal auditing process, the controls are tight. You have a good control. Guys, what are auditors? Little bit auditors. Auditors are the people who come and check the FS and they give their opinion. You have an audit and assurance paper. So like whether FS are true or fair on a sampling basis, they check, sample. That's what they give. External auditing, you must pass it. Internal audit is nothing to pass or fail. They're your own employees. And they suggest, boss, this is wrong. This is weakness. We have weakness here, weakness there. That is called control. Just a little talky about corporate governance. Corporate governance, CG. The system by which companies are being directed or controlled. Like a good corporate governance practice should be in place for any business. Yeah. So good corporate governance means you are honest, your FS financial statements are being true and fair, you abide by the rules of ethics. Yeah. So director's responsibility to show the company, portray the company and work lifestyle, work style into the organization or the company's norm, basically, or culture, values consist of corporate governance. Yeah. Do you do malpractice? That is not a good corporate governance. Do you do overtime and don't pay properly? That is not a corporate governance. Good governance. And you don't follow the ethics. That is not a good corporate governance. So primary purpose is to monitor the parties within the company, control the resource owned by the investor, suitable balance of power, like directors, non-executive director, ensure the executive directors are remunerated fairly, give salary to them. Non-executive directors are there. Yeah. The board of directors responsible for monitoring and managing risk. External auditor remain independent and free from influence, like you don't pressure them, no bribe and all. Ethics, we said, or CSR is a good one, corporate social responsibility, like you're not polluting the world. Even if you're doing it, you're planting trees and all. And objective is to contribute improved CG, corporate performance, long-term shareholder value. Control the controllers means the directors increasing the amount of reporting and disclosure to the stakeholders. So into the annual meeting, you report everything about directors to the stakeholders. increase the level of confidence and transparency company's activities to its investor. You're running legal and ethical. You build the control the top, cascade down the organization. Can you please make some notes on it? So this chapter is all theory. We have talked about the remuneration and all, but if you go over, there are UK Corporate Governance Code. There's a US Corporate Governance Code, which you call it Oxley Act. Sarbanes-Oxley Act. And I believe that is the end of it. Describe the role of the corporate governance. So those theories, you can bring it down. Yep. You see, although they repeated it here, national board and all. So if we meant to briefly describe the role of corporate governance, it is here. It's to protect shareholders' right and wealth, enhance the disclosure of the transparency, facilitate effective functioning of the board of directors, and provide the efficient legal and regulatory environment enforcement framework. Again, entities are directed. This is the system and controlled. Not only do they do the right thing, they're seen to be doing the right thing. It's not like, are they doing the right thing? We're going to see them like they are doing it right. Different approach of corporate governance, of course, there. Oh, okay. Let's talk about this principle-based and rule-based a little bit. UK is principle-based. Hold on. Principle-based means you rely on integrity and honesty of the companies. Yeah. Like there is no set rules for companies presumed expected, like judgments are welcome here. Like UK law is also judgmental, it's not written law. But US people are not like that. They're strict and they believe in rule-based, not the principle-based. Legalistic approach, upholding corporate governance best practice. It may lead to criminal offense and penalties and breaches of corporate governance. So UK people, rules are not written. It is based on honesty, integrity. US rules are written and it is punishable, and if it's breached, imprisonment. Right, we'll keep till this today. Although in this book, ACCA Hub, the next chapter is double entry, which you're going to do tomorrow. Okay, everybody? Very fun one. I believe you already know what is debit, credit, balance sheet, DBD, and all. Yeah, I have you can check KBM training YouTube channel for this one. On a KBM YouTube channel, can I show you KBM TR YouTube channel? I write down balance CTBT. It's written on the Google, and on the top two out of I don't know how many searches, basically thousands of searches, is us. So double entry, we are very popular. This is my YouTube channel. I made 8 years ago, 2018, this video, one of my very popular video. And I made this one last year, Learn Accounting in 60 Minutes. Watch both the fair and relevant videos. And another video on behalf of KBM. Please do watch these videos. Make sense? Like this video has been watched. 5,000 people liked it. This is my best video. 260,000 times is watched it. So very popular video. Watch it. Make some comment in it. But I would be. Oh, what happened? What happened? I'd be more happy if you make some comment on a KBM channel. Only 5 people have liked it. I should like it as well, shouldn't I? Accounting lecture. Let's like it and make some comment. I hope it will be helpful. Okay. Is there some advertising? Sorry, guys. For some reason, it went blank. Can you hear me? You can see me, I believe. Yeah. The internet went down. It is back and good. Can you hear me good? Yeah. Can you write back to me? Can I see some? Yeah. Yeah, I just showed you. Yeah, welcome. We're just saying goodbye now. I showed you the two YouTube channel, KBM Training and Recruitment, and also my channel. And those are very popular videos out there. Do watch it. Do watch it. Stay ahead in the lesson. All right, everybody. Okay. So let's say goodbye for today. What is your thought here? And see you tomorrow, same time. Hmm? Wednesday and Thursday, 2 days. Yeah. Right. So it's a goodbye from today. Yeah, goodbye. And you're welcome, Mohit. See you tomorrow, same time. The Rahman is typing. Ashraf is there as well. Right. That's all right. Thank you. Yeah, learn with fun. That is our funda. Yeah, you're welcome. Thank you. Thank you, everybody. It's a goodbye. And the video is recorded. You can watch it later on our platform. Bye bye.